How is everybody doing today? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today's episode, I wanted to talk about options and this kind of idea of options mania right now. So I wanted to share two things with everybody, an article from the Wall Street Journal and a blog post from the Wall Street Journal. I think people will find the blog post very interesting, but let's go to this this article. So this is titled, "In this frothy market, it's boom times for brokers like Robinhood. Individual investors are trading with abandon, driving up prices of everything from stocks to crypto and turbocharging the brokerage business." So you can see Robinhood just released their second quarter earnings last week. It was basically a blockbuster report. Their shares have soared since, and you can see here Robinhood is just really blowing up at the moment as for terms of their stock price. But Interactive Brokers, Charles Schwab, still doing pretty good for the most part as well, but definitely not doing quite as good as Robinhood. So brokerages, including Charles Schwab and Robinhood, are seeing boom times as investors pour money into stocks and other assets. Most Robinhood users expect markets to keep climbing in the third quarter, according to a July survey from Morgan Stanley. Many investors expect volatility to continue through the end of the year. So it's a great year to be a Wall Street middleman. Investors are hot for just about everything right now, from the Magnificent Seven and meme stocks to crypto, options, and exchange-traded funds. This is bringing boom times to brokerages, including Charles Schwab, Robinhood Markets, and Interactive Brokers Group, which are all raking in revenue. Individual investors poured a record $155 billion into stocks and exchange-traded funds in the first half of this year, according to Vanda Research, and margin debt balances have never been higher. It's a little concerning. That is also true for brokerage's own stock prices. Shares of Robinhood have nearly tripled in 2025. You have this huge wave of retail trading, said Don DeLev, a senior analyst at Mizuho Securities. Being a broker means you're at the center of it. Trading revenue at Robinhood surged 65% in the second quarter from a year earlier. The company said Wednesday, buoyed by growth in cryptocurrency and options transactions. The brokerage's quarterly profit more than doubled to $386 million. The results follow strong numbers by two of its biggest publicly traded rivals, Charles Schwab and Interactive Brokers. Earlier this month, Schwab and Interactive Brokers reported trading revenue gains of 23 and 27% respectively. So investors are bullish. Bullish heading into the back half of 2025. About 81% of Robinhood users expect markets to continue climbing in the third quarter, according to a July survey from Morgan Stanley, compared with 66% of the broader population. That widespread optimism among investors has been reflected in signs of increased speculation. Investors are crowding into such social media darlings as Krispy Kreme, Kohl's, and the house flipper Open Door Technologies. While the recent resurgence of meme stocks might have paled in comparison to the frenzy that enveloped the markets in 2021, it did remind some analysts of the sway individual investors can have over the markets. So I wanted to point this out, that basically we're seeing this boom in the brokerages right now, and that basically everything. And now Robinhood, I don't like Robinhood. I don't care for Robinhood. If you followed a lot of my episodes of the live stream over the last few years, you would know I think that Robinhood has done a lot of unscrupulous and shady stuff to their customers in the last 4 or 5 years. I don't trust these guys. I think that everything they do is that they don't really care how they make another dollar. They're just out to make another dollar. Whereas I think Interactive Brokers has traditionally been more, geared toward the professional trader. Charles Schwab, obviously purchasing TD Ameritrade in recent years. So I think Charles Schwab has a more, I would say established retail investor, maybe people who are like in their 40s and 50s and 60s, as opposed to Robinhood, who has really gotten into more gamification, if you will, and has really targeted the younger investors. And I would say this, and I'm going to show this in a second as we flip gears here toward, because I want to bring in this other blog post that I got for everybody. I would just like to say that, but how are people actually are people actually making money with this? And so here, let's go into this Word document here, and I'm not sure if I can make this. Maybe go in like this. Maybe see if I can focus this in here. There we go. That's a little bit better. Okay. So the question then becomes is, is this a good thing? And does this make sense for a lot of investors out there? Like, are they actually making money doing this stuff, or are they just, losing their butt, so to speak, every trade? So let's look at this. Why options mania is a contrarian indicator. So stock futures point to the possibility of fresh record highs on Friday. Earmark, as American Express, Charles Schwab, all these other ones. So this used to be a day when the stock market turned its gaze elsewhere, the options pits. There's still a reason to pay attention. Options markets are bigger than ever, but they no longer march to a monthly rhythm. That makes the traditional focus on contract expiration, the third Friday of the month, about as quaint as those tiered floors filled with gesticular clerks. Instead, while put and call volume has exploded, it is mostly now processed by computers, and those options are now often bought and expire the same day. Options contracts give investors the right but not the obligation to buy or sell a security like a stock or index at an agreed price. So they're already, by their nature, volatile, and individual traders have fallen in love with a particularly racy variety offered lottery-like payoffs, zero-day-to-expire contracts. Since time is a big component of a contract's price, those that can be exercised in days or just hours are a source of cheap thrills. As big profits for firms processing orders, Exchange CBOE says volume in zero-day contracts on the S&P 500 index has grown nearly six-fold in 5 years. More than half of that is now made up by individuals. Last year, broker Robinhood, which played a starring role in meme stock mania, made 4 times as much from options tradings by its clients as it did from stocks. Its shares are up 336% in the past year. There are occasional success stories like Roaring Kitty of GameStop fame, but the vast majority of individual option buyers lose, and their billions of dollars don't go to money heaven. They're mostly shared by market makers like Citadel Securities and brokerages like Robinhood that route orders to others for rebates. That's called front running. And yes, pay for basically what am I thinking of? I'm losing my sense of the term here. And it'll come back to me in a second, but let's go on here. So instead of using options as part of a larger strategy to protect portfolios from losses, individuals are mostly speculating. In the case of GameStop and the like, reckless buying organized on social media acted like a force multiplier. Because options markets makers need to hedge call contracts, they bought the underlying stock in a virtuous cycle that devastated hedge funds, but then boomeranged on unsophisticated buyers. That isn't something that should worry long-term investors, said Scott Nations, president of options index developer Nations Indexes. The preference for very short-term contracts means there isn't enough time to affect the market much, and fears of a volatility meltdown akin to 2018's Volmageddon are also overblown. But he says options activity can be a contrarian indicator for individual stocks. Index options will generally exhibit something called put skew, in which downside protection is more expensive. That's because investors pay a little more for insuring against losses than betting on gains. Individual stocks occasionally exhibit the opposite for psychological reasons. Among the 10 largest stocks in the S&P 500, only one exhibits call skew, and that is Tesla. If traders' weird affection for a company worth more than every other car maker on the planet combined isn't a sign of froth, the amount of money novices are incinerating in the options market certainly is. And then here's just a chart here that basically says a U.S. average daily options volume. You could see starting in 2000 really started to increase. We got up to about 2011, and then we saw kind of a blip down for a number of years. And then starting at about 2017, we saw a blip back up. And then, around, 18, and then we started to come back down. And then around, somewhere around 2019, it has just exploded since then. And obviously, Robinhood, no doubt, is pushing a lot of this amongst the younger investors with these 0 day, 0 day to expire contracts. And obviously, you got a lot of novices out there jumping into options trading. You start to ask, I think, a lot of questions here with this. Is this gambling? Is this not really trading? Is it really more gambling? Do people really understand what they're doing when they're buying these contracts? It just, yeah, there's a part of human nature, human psychology that goes into a lot of this, where you're basically sitting there going, are you using, there's a lot of great option strategies that are out there that you can use as basically, security to hedge against potential losses. But again, if you don't know what you're doing with options, they can be devastating. Like you can lose a ton of money. Basically doing what are called naked options, naked trades, where you don't own any underlying stock, especially if you're trying to short a stock. And then you've got margin accounts again at all-time highs. I mean, a lot of this stuff adds up to not good things at the end of the day for a lot of investors out there. So, again, I would just, I saw this. I wanted to point it out because it was something that I see as troubling. And again, my recommendation to anybody would be to, before you start doing this, maybe use some kind of fake money type bets. I know that like if you use Schwab, TD Ameritrade, Investopedia is a great one, where you basically could get just a kind of like a fake account where you could practice trading, just practice trading, learn about these products, learn how they work, learn what's the difference between a call option and a put option. Learn about different options trading strategies, learn how to use this stuff, again, for a novice investor, when you're first going out, are you going to lose money? Yeah, most likely. Is it possible you could have a little bit of beginner's luck and you just hit on a couple trades early? Sure, that could happen. But for the most part, think of, Robinhood, Charles Schwab, Interactive Broker. They're like the house. They're like the casino, right? Casino always wins at the end of the day for the most part. So again, and who's making gazillions of dollars off of this right now? Well, Robinhood is, Charles Schwab is, Interactive Brokers are, not the individual investors for the most part. So again, I would just, I preach education, right? I just preach education, keep an eye on this, know this. If we have some kind of a meme stock, market meltdown someday, this may be at the core of whatever it is that's happening. I don't know. We'll have to see. But like I said, just get educated out there, go, again, I'd like to say, go talk to financial advisors on this, but financial advisors are not, they're not day traders. They don't promote that. That's not their gig. That's not their thing. So what I would tell people is, go out, read some books, practice, learn how to trade, learn about fundamental analysis, technical analysis, learn how to read stock charts, learn how to do a lot of this stuff, before you start, really getting crazy with it. So, but that's all. Like I said, I thought this kind of options mania at the moment was rather interesting. Wanted to share with everybody, but like I said, that's all I got for this episode today. So if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, make sure to check out some of the other content on the channel. I hope everyone has a great day out there. Oh, and don't forget to check out the Strategy Room live stream, which is the main show of the channel. That is on Saturday nights at 8 p.m. So be sure to check that out. But with that being said, have a great day out there, and I will see everyone again real soon. Thanks.